So next up, we'll take a look at Bitcoin and the S&P 500. So while Bitcoin is negatively correlated with gold, it's positively correlated with the S&P 500 futures, which is the derivatives market, at a correlation of about zero point 0.2 to zero point 0.3. Now, this is a further compounding of the inherent risk with Bitcoin, as a correlation with implicitly risky markets such as derivatives or futures markets only solidifies its status as a risky or volatile asset, which kind of takes away from its place as a store of value or a store of stability, which gold currently is and what Bitcoin is trying to replicate. So this is something that we'll have to see how this plays out in the future. Now, a study focusing on correlations for periods immediately after extreme Bitcoin price movements, which we'll classify as occurrences where Bitcoin's hourly price change was 10% or greater to the upside or downside. This study was done to test the claim whether or not there was a strong correlation between Bitcoin and S&P 500 derivatives markets. Now, the following 60 hours after these extreme price moves are deemed to belong to the extreme period, quote unquote, and are studied to pinpoint correspondence. So here's a study taken from the IMF. This is from the IMF, and this is sourced from Yahoo Finance, Crypto Compare. Stronger correlation. Bitcoin and U.S. stocks have moved together more closely during the pandemic. Basically, we're seeing a stronger correlation between Bitcoin and the S&P 500. Here we see in this lighter blue color, this is the Bitcoin price chart. And in the darker blue, this is the S&P 500. And here we see the various axes, the Bitcoin price axis, y-axis on the left side, the S&P 500 y-axis on the right side. And this is taken over a 4-year period from April 17 to April 2021. Now, we do see, in terms of correlation, we do see general correlations between April 2017 and 2018. Taking a look at the price chart, we do see general market movement upwards, really showing a peak in correlation of around here in terms of correlation, at least pre-2020. In April, we could say just about maybe March or April, Q1, Q2, 2022. This coincides with this general downtrend, right? We actually see as Bitcoin reached a peak here, this was just below this peak, just before the peak of the S&P 500, at least for this time period. We do see a inevitable downtrend, and coinciding with the Bitcoin downtrend going into 2018, April 2018. So we do see that there is a strong correlation, or a noticeable correlation, of about 0.4 we reached the peak. Now, we wouldn't see levels reach this level of correlation. We do see a severe negative correlation through we do see a severe negative correlation between Bitcoin and the S&P 500 throughout 2019, particularly focusing on April 2019 going into 2020, where we do see the Bitcoin market reaching a peak of about maybe 11,000 or so in 2019, and ultimately falling, whereas at the same time period, the S&P 500 is continuing upwards and producing new all-time highs. So there we see this inverse. S&P goes up, Bitcoin is going down. Now, this would reverse. This would change going into March and April 2020, where we start to see a severe shift in correlation between Bitcoin and the S&P 500. Here we see the bottoming pattern, markets falling with news of the coronavirus pandemic. going into April and March and April 2020. Both sides, whether that's the S&P 500 or Bitcoin, both reached severe lows, at least relative to where it was, and then a corresponding really a blossoming of price really in the S&P 500 and also in Bitcoin as well, where we start to see a much stronger correlation between the markets, positive correlation in April 2020 and going into 2021 as well, generally maintaining this value of at least 0.2 to 0.4, so maybe a 50% correlation, positive correlation, if you will. If the S&P goes up, the Bitcoin is to follow, and likewise, if Bitcoin is to go up, the S&P was more typical to follow as well. Now, to break this down, the study focused on 4 trading days with the aforementioned extreme Bitcoin price movement. December 28th, 2020, we saw a positive price change. January 4th, 2021, we saw a positive price change as well. A January 29th, 2021, a positive price change, and May 19th, 2021, a negative price change. So this is the study focusing on these 10% moves within an hour range, and then the following price movement. Here we see this is a source from Bloomberg, correlations with Bitcoin returns and the S&P 500 futures. Post-extreme moves. After a rather large move with Bitcoin, we did see a 0.26 hourly correlation between the Bitcoin and S&P 500 charts. And during normal trading conditions, we saw this lower to about 0.19. So while still not as high as these post-extreme moves, during normal trading conditions, there still is a noticeable positive correlation between the two markets. Now, the analysis shows that the Bitcoin and the S&P show a heightened positive correlation after these extreme moves compared to normal conditions. This suggests that broader equity sentiment could be more correlated with Bitcoin market sentiment for a period of time. In this particular study, we're looking at that extended period of time of 60 hours after an unusually large move, whether that's up or down. Now, the study also showed that the S&P 500 futures returns variance after extreme Bitcoin moves was 42% higher than returns variance during normal trading periods, indicating that after an extreme move in the Bitcoin market, we saw almost a 50% volatility in terms of returns compared to normal trading periods. So there was a noticeable correlation with that, and indication that Bitcoin moves could have some sort of influence, at least on the S&P 500 derivatives market. Now, we also see clear statistical evidence that the volatility of the S&P 500 futures is significantly higher than normal in the aftermath of an extreme price move in Bitcoin. So here we're starting to see this greater correlation between the two markets, and whether or not this is due to increased overlap, as we've mentioned before, that remains to be said. And remains for another study, but we are starting to see, based on the evidence that we're seeing above, that there is greater correlation between these two markets, positive correlation at that. And to just mainly focus on the price of the S&P 500, SPX, here we see in orange, Bitcoin US dollar in blue. Generally, these patterns are much more correlated than ever previously shown before, particularly after this portion of March 2020, after this bottoming and this the economic impact of the coronavirus pandemic. We are seeing these markets start to become more grossly intertwined, and at the same time we are seeing the Bitcoin and overall general crypto market grow and start to mature and really blossom, turning into at least 2 trillion, if not almost a $3 trillion market capitalization.